We are technically profitable.
Okay.
The numbers that you see reflected on our financial statements are because of the accounting impact. Our adjusted EBITDA, in fact, grew by more than 3.5 times from about 36 crores to about 177 crores in FY25. So currently our net debt stands at about 310 crores.
Okay.
Post the IPO, we are also repaying close to about 114 crores of high cost debt. And the company is in fact going to turn net positive right after IPO. We will be net debt positive, so we will be debt free.
Debt free. And what about at the bottom line?
So our bottom line, just to give you a perspective, has actually grown by more than 3.5 times in the last 3 years. So the last year's numbers in FY25 was 176 crores. And technically, if we exclude the accounting impact.
So could you give us those numbers? Now I can see FY25 revenue, operating revenue was about 1374 crore rupees. Your EBITDA was about 857 crore rupees, and you come up with an EBITDA margins of 63% thereabout. Break it down for us line by line after this.
Absolutely. So once we take the about 850 crores that you just mentioned, the first adjustment that you would basically make is for the lease rentals that we end up paying, which is close to about 650 crores. Then you have the additional 40 crores that we pay as financing cost. The balance is the amount. Once that is adjusted, you derive the number of 177 crores.
Okay. So debt from 310 becomes
close to about 220-ish.
Okay.
But the cash
I'm still
balance
trying to get the thing right at the bottom line. X of all the adjustments, what I can see on my P&L, when do you think you will turn profitable?
So while I will not comment on the exact timeline, what I can give you a perspective on is that our revenue has grown by more than 2 times in the last 2 years. In spite of the massive revenue growth, our EBITDA has grown by more than 3.5 times. So it is going to be very imminent in the near future.
Imminent in the near future, okay.
Where the company is
so 15% margin sustainable, or can you expand on it?
So it has been expanding over the last 2 years. I can't comment on the future numbers, but if you look at our trajectory in the last 3 years, we've significantly expanded 4x our adjusted EBITDA to get to that 177 crore mark. And we've grown significantly in this time, both in terms of square footage. We were at about 6 million square foot at that point of time back in 2022. We've grown to almost more than 10 million square foot today in 2 years. So our base has increased, our revenues have almost doubled, and our EBITDA margins have increased by 3.5 times.
Okay. And this revenue CAGR, I think I can calculate it close to 40%, 38, 39%. Is that the run rate? Do you think that's possible going ahead as you continue to scale and add capacity?
See, India definitely has the opportunity right now. If you look at the market, the flex space market in India was significantly small back in 2016 when we started this business. In a short span, it's grown to almost 80 million square foot of space across the country. If you look at CBRE's report, they've projected this number to go up to 145 million square foot. So the base of the industry itself is growing significantly. India is actually becoming a large flex market. It is one of the largest flex markets in APAC region today. So you'll definitely see the market evolve further, but we can comment on the last 3 years where we've seen a significant jump, as you rightly mentioned, almost 40%, on a CAGR basis.
And today, I think you've got 10 million plus square feet in terms of what you're operating.
Yes.
How will the number change? I mean, what are your ambitions 2 to 3 years down the line? And even geographically, would you be looking to expand into tier 2 cities or go deeper in Singapore or add any other international markets?
So our strategy is obviously to keep growing the base. We have been able to grow at a certain pace in the last 2 years, which is 1.5 times that of the industry. Industry has only grown at about 23, 24%, while we've grown at almost 1.5 times of that at about 38%.
And of that 147 million square feet of space which is going to come up, how much do you think your share would be? From 10 million, where do you go?
So I think I can't comment on the future numbers, but what we can say is that we have grown faster than the industry.
1.5 times.
Again, 1.5 times faster than the industry. It is because of our model choice of what Smartworks really does. We have created a true platform. Smartworks today is India's largest managed campus platform. We take up buildings from non-institutional landlords. We don't take a floor or a part of a building. We take mostly full buildings. we convert them into large campuses with all the amenities that today's day and age employee requires. So we'll have outdoor and indoor gaming zones, we'll have multiple, we'll have gyms, creches, cafeterias, collaboration zones, medical rooms, all of this designed within our common spaces of the building before designing, custom designing, building and maintaining the space for our large enterprise clients. Our focus is on mid to large enterprise clients. Almost 90%, 88 to 88% of our revenue comes from enterprise clients who are committing to more than 300 seats. 65% of our revenue comes from clients who are committing to more than 300 seats. If you look at that, our ability to take up such large buildings, which is unique, we take up on an average about 180,000 square foot of building, which is significantly higher than the industry average. We give it out to large enterprises who are looking on an average, about 65% of our revenue comes from clients who are taking more than 300 seats. So they are taking that much.
Very quickly, so tell us, promoter holding is 65%. Y'all are selling partly in the offer for sale. What would that number come down to? And what are the plans? Are promoters going to stay long-term? I mean, are you long-term committed to the business? And even the big investor selling is Keppel Land, and they were early backers of yours. So what's the signaling there?
No, certainly. So Keppel Land has been a very long-term strategic investor in the company, and in fact, they've reinvested in the company as well. They, in fact, took a call to reduce their selling and reduced it by half.
Okay.
Taking cue from their longer-term orientation, we also reduced our OFS by half. So they will, after the IPO, continue holding about 15%.
From 19.
From 19. As promoters, we'll continue holding close to about 59%. And the relationship with Keppel is such that we last year acquired both of their co-working spaces in Singapore. And happy to share with you that today they are both profitable.
Who are some of the other big investors in the company?
So today we've got a very good set of marquee investors, which include high-quality family offices such as Ananta Capital, Hexaware, Jagdish Master from the Inam Group. We also have Deutsche Bank, who owns 1% stake in the company. And we do have angel investors. So Mr. Madhu Kela invested in through Mahima Stocks, which was back in 2017. And he has continued to reinvest in the company.
Okay, so that is Smartworks hitting Dalal Street on this Thursday. So do watch out for that one. We need to take a short break, but here is some good news for our viewers. India Business News Leader is now just a click away. Introducing CNBC TV 18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV 18 app now from the Apple Store or the Google Play Store, or just scan the QR code on your screen.